Pete McGuire, of course, joining us now in the studio about all of this and more. And Pete, a very good morning to you. Always
good morning,
a pleasure
Maura.
to have you here. And obviously, iron ore, the price rebounding, back up at that 122 US a tonne level. A slight blip on the radar. The falls down around that $88 mark. It seems to be back in September. We're back travelling well. Do you take this as just a positive and that it really was just a bit of volatility, short-lived?
Well, it was certainly volatility, Maura, and good morning, Carson. Yeah, where we saw the market tip to that $86, $87 range, there was very much talk there that we could have seen the $70, but I think that was probably too low at the time. I'm not saying that you won't see further volatility moving forward, but at this 122 level is quite good. China came out and said they're going to spend another $158 billion as far as, and they call it a roads to sewers, as far as stimulus. They're building everything, and remembering that China imports more iron ore than the whole world put together. So their demand, shipping is certainly increasing, and as far as the news coming out there as Olympic Dam and so on, it's an upbeat for a lot of the miners.
So the government might get its budget surplus?
I can't forecast that one. I mean, that's a hard one to say, but maybe you might see something one day, Maura.
I think we've got a chart. Do we... excuse me, to show rebar the trend.
There's the dip.
Yeah, a big sell-off there, Carson. When you saw that, you know, we were sitting there 160, 165, going back to, you know, the best part of a year ago, and now you're looking at that price really did come under a lot of pressure. It was massive, you know, correction going into second quarter, third quarter, and then it's rebounded strongly from those numbers to sit at 122. Shipping, what's been very interesting is you've seen a return to shipping and Capesize and the Panamax and all of the large cargo ships as far as the costings are certainly increasing. So the shipping industry is far more pleased this time of year versus going back a few months back.
You've seen a bit of a two-month rally in shipping.
Yes,
from my knowledge.
Well, exactly right, and then you know and that's flowed across naturally to the price from that $86 range all the way to 122. I think where you're sitting at the moment, Maura, I wouldn't be surprised to take 125 to 130 out in the upside. Probably sometime in November, but it's very hard to forecast. You've only got to have a look at the volatility of iron ore, and it's a damn tough market to trade.
What about winter? Seasonal slowdown?
Oh, you
got
could
to be conscious of that.
Yeah, but remembering that dependent upon whereabouts in China, yes, you've got certain conditions as far as, you know, snow and different cities that come under that blanket of snow and weather conditions, but a lot of southern China doesn't have those issues. No. So I think you're going to see that continued rebuild and infrastructure spend, and, you know, China, it just amazes the world. When you think about it, you know, as I previously mentioned, it consumes more iron ore than the rest of the world put together. That really is. It hits the ball out of the park every time.
And eco-political tensions, disputes, situations around the world seeing platinum and palladium at basically shortages, seriously shorted.
Absolutely, Maura. You know, we've had increased auto demand, so that's been a plus, of course, for those precious metals. And you've had those strikes come on, so we had very, very strong... as far as supplies were concerned, we very, very good as far as 2011, and now in the latter part of 2012 we're coming under some major pressure there, and 2013 is going to be a tough year for both of those metals, and you wouldn't be surprised to see probably, you know, platinum trade $1,650 to $1,700 range over the next, you know, 3 to say 9 months. So a fair bit stronger than where it is at the moment.
Will we see related shares, do you think, also take on similar movements?
Well, I think if they're in that, I mean, if you're talking global stock markets and global shares, certainly if they're in that space, Russia's, as far as their production numbers are well down, South Africa's were well down after the mining incidents over there and the strikes and so on. So that's impacting, and I'm sure that you'll probably see an uptick as far as share prices.
Let's talk, if we can, this notion of price fixing in the Nat Gas market. It's kind of rocking sentiment a little bit at the moment, particularly when it comes to what's coming out of the UK. You know, unusual trading activity possibly skewing the price. How serious is this?
Well, it's very serious. I mean, there's no doubting that, but as far as the seriousness of it, if it's collaboration, then that really worries the true sense of the market, and you don't know what goes on behind the scenes.
Well, I mean, comparisons with LIBOR and manipulation.
Yeah.
Seems that London's looking pretty rotten.
Yeah, well, when you look at it like on that sort of, through that lens, then certainly there's much concern.
I mean, first the BBC, now Nat Gas.
Now Nat Gas, yeah. Where do we go from here?
Who's the mastermind behind it all?
Austin Powers, maybe.
And now they lose their financial services crown to Hong Kong. I mean, so it's New York, forget London, vault straight over to Hong Kong. I mean, what are we kind of eyeing here in terms of a shift in power?
It'll be forgotten. It always is.
Yeah, it probably would be
under
forgotten.
the rug.
I think you're right, Maura. Look, it's a hard one to speculate on, but that makes you feel very uneasy that if there is collaboration out there and people have been doing this and manipulating markets and it's becoming quite evident, well, that certainly doesn't put a lot of confidence as far as traders are concerned or, consumers. So, let's just see what happens over the next, matter of weeks as far as these releases, and I'm sure that the story will become bigger than what we even think.
Okay.
Weakness for crude prices, Brent and the NYMEX contracts. The IEA revising lower that demand.
Yes.
Basically, which, too much supply, not enough demand.
Well,
there's some 300,000 barrels a day.
Yeah, well, the major concern is certainly in 13, as far as the IMF's numbers, Moira, that we're thinking that you're going to see a downturn or not as robust growth as what we had forecast. And there's certainly issues out there as far as, that's another side of it, of course, as far as dependency and the US becoming a net exporter of crude in years to come. But at the current frame, you've got to, one needs to think that if the globe is growing not as robust as what they had forecast from the IMF, then you're going to see those numbers as far as crude probably stay at that 90.5 to 91 million barrels a day.
But just looking forward, Pete, because we all are trying to become less reliant on these fossil fuels. We're trying to turn to green or alternative energy sources.
Sure.
LNG and
cleaner burning fuels.
Of course. So at some point we are going to see less demand for the crude oil as it comes in its current form. Where do we see that tipping point where the markets readjust themselves to fit in with the changing, bigger environment?
Maura, you need innovation and you need to change behaviour. And do you go down the path, and it was always mooted years back as far as hydrogen economy and hydrogen vehicles, electric vehicles. I watched something recently about Elon Musk and the electric car. All of these things are great as long as you've got consumers that want to buy in. But if people are still addicted to gasoline and it's on every corner as far as petrol pumps, then that's behaviour, and you need to change the behaviour. And the only way you can do that is possibly put cleaner burning fuels in there as far as ethanol and so on. But as far as the demand picture is concerned, America is sitting by 2030, 2035 as a net exporter, so it'll be the largest...
So what happens to Saudi? Are there enough V8 engines in the Middle East driven by the local population over there to support...
I think there's enough people everywhere to support. You've got falling markets. If you look at tobacco consumption, in the Western world, tobacco consumption is falling away and people are becoming more health conscious, yet it's booming in certain economies across the world. It's going through the roof. So I think you're going to see the same situation with possibly gasoline consumption.
We haven't touched on Middle East. Just finally, there's been an escalation in the sabre rattling between Israel and Hamas, actually, of late. Airstrikes, concerns over fatalities. What does that do to crude? Does it kind of heighten Iran's kind of, dormancy and bring that back into place?
Yeah, I think what we've seen is that premium, that geopolitical premium was certainly taken out of the energy markets over the last couple of weeks. You may see that return if we see something significant or concrete happen through that whole region, and there's talk that, Iran's going to become more active. But, it is a little bit of sabre rattling at the moment, but it's just a wait and see game.
Okay.
Let's see. It's going to be very interesting over the next couple of weeks and months, of course, in that whole region.
All right. Pete, come back next week. We'll see you then.
Thank you, Maura.
Chief Market Strategist and Economist at NG Farah, no less.
Time for a break. After that, more market